What if I'm self-employed?
What is a mortgage?
What is your
How does the
primary
fixed rate
What's
work?
the number
How much do I need for a down payment? This video is about answering those questions. Welcome to this episode of Mortgage Science. Today, we'll talk about renewal versus refinance. A renewal is at the end of your term. That's when you decide which way you want to go. Let's take it to the white screen. So let's say you started your term on January 1st, 2020, and you are on a 5-year term. Your renewal date will likely be January 1st of 2025. Now keep in mind, you do have access to different terms like a 1-year term, 2-year term, 3-year term, 4-year term, even a 10-year term. The term is simply the length of your contract with this one lender. All right, back to the white screen. So in a renewal, you're basically moving the exact same balance to either a new lender or the same lender that you're currently with. All you're doing is you are renewing the term, okay? And it's normally the exact same type of mortgage, the exact same everything, where you are not pulling any money out or making any changes to the current mortgage that you have. Again, you can move it to a new lender or you can keep it with the same lender. Normally, you would shop around to see if any new lenders are offering you any better interest rates. A refinance is different. A refinance is basically where you're taking advantage of the equity in your home. Assuming your house is worth $500,000, that is the value, and your current balance is $200,000. You basically have equity of $300,000 in your home, okay? This is when you are changing the terms of your current mortgage and you are increasing your balance. So you're paying off the existing balance of $200,000 and you're borrowing on top of it to use some of that equity. You can do this with the same lender or you can do this with a different lender. You can also do this in the middle of your term or you can do it at the end of your term. Normally, when you're doing it in the middle of your term, you will pay a penalty. By the way, you can also renew your mortgage in the middle of your term and just switch it to a different lender, okay? Now, lenders see that a little differently. That's getting more complicated, but let's just focus on this here. So let's say you can go to 80% of the value of $500,000. That means you can go up to $400,000, okay? So you'll increase your $200,000 to $400,000 and you are getting equity takeout of $200,000, or you can pay off some debt, invest it in equity, whatever it is that you're doing, or you can actually attach it onto a home equity line of credit where it's still considered a refinance. One thing to keep in mind, if your original mortgage has a home equity line of credit attached to it, you can't simply renew it anymore. You actually have to refinance it because now you have two collateral charges. A way a home equity appears on title is this is your first mortgage of assuming $200,000, okay? And then the HELOC here, home equity line of credit, is let's say $50,000. This is a first charge. This is a second. So even if you're not using this $50,000, because it's available to you, you can no longer simply renew. Renewals become out of the question. You have to automatically refinance because now you have two charges instead of one. Thank you for watching. Please leave a comment if you have any questions or any videos or anything you'd like to learn about any mortgage term that you've heard.